Onto your markets now. Asian markets were mixed today. Previous days' optimism around corporate earnings seemingly gave way to another wave of concerns about global inflation, as well as concerns about China's growth trajectory, given how it's dealt with COVID-19 flare-ups, among other issues. The Bank of Japan kept its interest rates ultra low at 0.1%, bucking the trend of other central banks. The Nikkei share average ended the day up 0.44%. Hong Kong shares faltered quite a bit, with the Hang Seng Index ending down 1.51%. On mainland China, Chinese equities came under pressure on both the virus and property sector risks. The Shanghai Composite Index declining by 0.99%. Let's just call that 1%. Over in Wall Street, those markets ended the day in positive territory. This as investors welcomed healthy earnings reports from U.S. companies, but the mood could quickly change as talk circulates that the Fed may have to raise interest rates by a full 1 percentage point at its meeting next week, raising concerns that this may tip the U.S. economy into a recession. The Dow Jones Industrial Average rose by 0.2%. The S&P 500 closed 0.6% in the black, while the Nasdaq lifted quite sharply by 1.6%. All right, to get more on what's happening in global markets, I'm joined by Hans Hen. He's the Chief Market Analyst at Xtinity. Thank you very much, Han, for joining us. Markets had picked up in the week, but are looking a little bit more indecisive. What do you see as some of the key issues driving investor sentiment right now?
So the primary theme is inflation, and by extension of that, how central banks respond to these red-hot inflation figures, and hence they have been raising interest rates aggressively, right? And these higher interest rates are feared that it could ultimately tip these economies into a recession. So it's this or these shifting nuances around that narrative. I think that's the key issue for investors right now, especially as we lead up to some key central bank decisions, both in Europe and South Africa today.
What about what's happening in Europe with the gas supply insecurity? How are market players reacting to that?
Yeah, so concerns about an imminent energy crisis in Europe were somewhat abated today, given that Russia did decide to turn the taps back on, so to speak, resuming its gas supplies to Germany. But still, there are greater concerns surrounding the energy complex for Europe, not just for oil, but gas as well. Already, governments in Europe are bracing for what could be a tough winter ahead, with rationing in mind. So I think overall, if those energy supplies continue scarce, I think that could severely raise the risk of a recession in Europe.
Yeah. Now, still sticking with the European area, the European Central Bank is going to make a call on interest rates. It hasn't raised interest rates in many, many years, but it is expected to raise interest rates at least by 25 basis points. What are your expectations and the rationale behind that?
Indeed, I concur that I'm leaning more towards a 25 basis point hike, and perhaps leaving some of the larger rate hikes for later down the line. I think markets are also very much concerned about the details surrounding the ECB's new tool aimed at curbing fragmentation risks, and more importantly, markets have to be convinced that this new tool that the ECB is set to announce has to actually work, because if neither the rate hikes or this new tool can actually convince markets, I think that could spell another leg down for European markets.
Yeah. Now, the US dollar, it keeps on pumping higher, which is not very good news for emerging market currencies like the South African rand. Do you think that trend is going to continue given all the uncertainty that we're experiencing?
The short answer to that is yes, and you use a very good word there. I think with the uncertainty on the global stage, it has only shored up demand for the US dollar. I mean, the dollar has been king of safe havens of late as we speak, right? And that's also, on top of that, you also have the Fed that is still aggressively raising interest rates. So as long as that aggressiveness continues and persists, then I think that should that could translate into more upside for the US dollar.
Yeah. Now, of course, given everything that's happening in the developed world in terms of interest rate increases or the propensity to raise interest rates, what do you think our Reserve Bank is going to do here, especially since inflation really overshot expectations, coming in at 7.4% for the month of June? We do have a very rickety economy that's just refusing to grow. Do you think that our Reserve Bank could potentially raise interest rates higher than 50 basis points?
I think, to be sure, my bias is I think that a 50 basis point for today is likelier. Look, but you're right to highlight some of the vulnerabilities in the economy, and also the idea that emerging economies have to keep pace with the Fed, right? But having said that, if you look under the hood for South Africa's inflation numbers, markets seem to think that the peak is closer than previously expected. And I'm getting those signs from how bond markets are reacting, and also how money markets are reacting as well with the shorter-term contracts. So, if investors think that South African inflation may be closer to its peak, that could allow the central bank to be less aggressive. So I think policymakers will continue to remain data dependent, see how the inflation figures pan out as they continue remaining vigilant about what's happening on the global stage.
So we'll wait and see. Han, thank you very much for your time and insights there. Han Tan, he's Chief Market Analyst at Xtinity. That's a wrap from me. I will see you at 3 o'clock for the special MPC broadcast where we find out what the Reserve Bank is going to do around interest rates. I hand over to my delightful colleague, Nzinga Kunta, who will take over after a quick break.